Welcome to the 40 Finance channel. Today I've got 5 sort of marquee stocks whose earnings projections are going down. And with that, I spend a lot of time on this channel on projections and fundamental analysis. And a lot of that's based on a fiscal year. That's how I kind of look ahead on things. But the fact of the matter is, out there with stock analysts and whatnot, you have a world that's constantly changing when it comes to things like revenue and earnings projections. And I thought this was an interesting time to do a video like this because the stock market has pulled back here significantly through mid-March. And so you're going to get a lot of people who are focused on the price and they just say, you know, the market's pulled back, the prices have went down, there could be a bump up, there could be a bump down. But beneath it all, when you get into a very specific stock, you can try to gauge how much of their problems or price decline is related to overall market sentiment, or are their projections in general for the company, for the singular company, are those projections dropping a little bit? All right, real quick, I'll just show you how I filtered to get to these names, and I did cherry pick 5 in particular, you know, 5 more well-known stocks, if you will. But I did use the Seeking Alpha Premium Stock Screener. Of course, if you watch the channel, you know I use Seeking Alpha Premium all the time. And if you're interested in learning more about this stock research platform, check out the link in the description. Get you a discount on the front end and a 7-day free trial before your card is charged. All right, so first line in the filter, you can see it's USA large and mega caps. I live in the United States, so we're going to focus on USA companies. And for the market cap filter, the smallest one I used here was 10 billion and up. Huge search result, 864. We're not going to go through all that. What I was looking for is this column here, and I hope it shows up. Yeah, EPS revisions. And there, I just zoomed in a little bit better. So I'm going to take this EPS revisions, and I'm going to sort it in ascending, so the worst, you know, at the bottom. And then if we scroll over to this side just a little bit, we can see the company name. So right now, in terms of EPS revisions, these are sort of like the worst companies out of the filter that I've set. Now, through that, we're not even going to go through the top, I don't know, 1 through 10 or so. I picked out some of the names I talk about more often on this channel, NASDAQ-type tech stocks. So we're going to jump into that, and we're going to lead off with AMD. Okay, so AMD, you probably know, it's been a pretty rough ride over the past year, down 45%. And AMD's problems started well before this most recent market pullback with concerns about growth, concerns about competition, things like that. But where it stands right now, you have an EPS projection looking ahead of 469, and that's a forward PE of 2205. Now, when you think of a forward PE of 22 and you sort of factor in AMD's growth rate in general, you'd have to say that this one's coming in probably overvalued, right? If you didn't dig in at all and you had to pick a side and bet $1 on it, I certainly would pick undervalued for AMD. But beneath the surface, one of the things that's really interesting over the past 3 months for AMD, if you're looking at the EPS projections, okay, you have 2 analysts who have raised EPS projections, and you have 36 who have lowered, okay? And then on the revenue side, a little bit better. You got 13 up and 28 down. And let's take a look. If we go to just this fiscal year that we're in now, which ends on December of 2025, trying to get this orange line to highlight here. But you can see which way we're going, which is down, and it's best represented in this table here. Current EPS estimate, this is consensus. To be fair, this is a consensus estimate, 469. Over the past month, that consensus has dropped about 0.39%. So not a big move, you know, kind of nickels and dimes, but you'd prefer to see this be a green number instead of a red number. And over the past 3 months, you're down about 8%. So this 469 that a lot of people like me would base some sort of projection on, it's going the wrong way, even if it's just taking a penny here or a penny there. And when you have a PE of, or forward PE of 22, every penny that goes down on the EPS line is magnified, 22 some odd times, depending on where the forward PE lands. Now, the good news for AMD is that revenue numbers are holding fairly steady. They haven't gone down too much over the past 3 months, and you do have growth of plus 20%, and that seems to be holding true over the past 30 days or so. So when you have a company that's growing revenue in the technology sector by 20+%, that's definitely going to buoy a stock. What analysts are going to focus on, though, is sort of the margin of the company, and can they continue to make good margins, because margin ultimately, trickles down to the EPS at some time. All right, next up we have Cloudflare. This one's actually up about 24% over the past 12 months and reached a peak of 176. Now you're down into the 115 range. Cloudflare's not wildly profitable. They've made most of their stock gains on sales momentum, but they've got an 80-cent EPS projected ahead and forward PE of 144. Okay, now, which way are their projections trending over the last 3 months? You have 5 who have said EPS revisions up, 19 down, revenue is 18 up, and 14 down. Now, if we scroll down and we'll just skip ahead to the table view because it's easier to see, here's your 80-cent consensus EPS. Over the past month, that's fallen by 6.5%, and that's in line with the 3-month. So again, you don't have a lot of EPS to work with, even to start with. So every time you get a tick down here, it gets magnified, and we're talking about a stock that right now has a forward PE of over 100. So when I say magnify, it's pretty substantial when it comes to Cloudflare. Now, revenue. And like I said, Cloudflare's made a lot of money off revenue growth. That's where they get the majority of their valuation from. It's hanging over the past 30 days. The consensus projections, 25% in year 1, 26% in year 2. Over the past month, those are holding. In fact, you have a small uptick of 0.01% and 0.03%. So that's the good news for Cloudflare. The concern would be if this growth continues and the projections or the expectations on the margin side or the profit side go down, that can be a troubling sign for certain companies. Next, we got CrowdStrike, currently at 376. This one peaked in Valentine's Day or so at 451, and it fell as far to 308. As it stands today, EPS forward 344, which gives you a forward PE of 105. Let's check out these earnings revisions. And similar theme to what we've seen with the others. So this is the last 3 months, 0 projections of the consensus EPS going up from where it is. 44 analysts have taken back some of that money. On the revenue side, you got 28 up and 18 down. Let's check out the table on the EPS side. So the 344 is actually minus 12% year over year. So no growth there. And then the 30-day trend on EPS projections, that's down 22%. And that's about the same for the 3-month and 6-month as well. Even getting into next year, next fiscal year, I should say, last 30 days, they've taken back 18% of this $4.59 projection. So you start doing that, and similar to Cloudflare, you start factoring in this 100 times PE, and this stock can get very expensive, and it's been very expensive for many years now, certainly since pandemic time. Now, what about revenue growth? Because ultimately that's where it's getting its stock valuation right now. You've got 22%, or excuse me, 21, 21, 24 as far as revenue growth. And over the past month or so, that's holding steady for 2026. In fact, it's ticked up a notch. But the following years don't have as much confidence in the last month or so. You got a flat here basically, and a minus 5% for the third year out. And the key for Cloudflare going forward is to make sure that revenue doesn't dip, because that's the thing that's keeping this stock where it is today. Switching over to consumer discretionary, we've got Nike, and I picked this one out of the hat basically because I see a lot of stuff, people looking at Nike trying to figure out, is it undervalued? Is this a good one to jump in? Well, where it stands today, you got an EPS forward of $2.09. That brings the forward PE to 35. That sounds like a deal when you stack it up next to Cloudflare and CrowdStrike, but the expectations for Nike are much different. Now, if we go to their earnings revisions, 28 down, 0 up over the last 3 months. You did have one analyst raise the revenue projection, but you had 33 who lowered it. You can see on this graph, not a lot of good news there. And with Nike, we got a fiscal year that ends in May 2025. So they're one of the ones, we'll get an earnings call late June or maybe it's July to check in on this number. Now, $2.09 is actually ticking up a notch over the past month. Problem is, it's minus 50% projection from the year before. So minus 50%, they were probably in give or take $3.09 last year. Right now, they're coming in at $2.09. And of course, you multiply that by a PE, and that's a pretty big step down. Now, has it adjusted? Can we start thinking about fiscal year 26? Because that basically starts on June 1st. The EPS is better, $2.33. Problem is next year, people are starting to pull back, claw back some of that projection. Last 6 months, down 34%. Last 3 months, 10%. And then here recently, another penny or two pulled off of that number. All right, how about sales? And this is where you really see the difference in a Cloudflare, CrowdStrike type stock when you're talking about PE, because you see that with a gigantic company like Nike, it's just really hard to grow these revenue numbers, certainly into double digits, right? If CrowdStrike had 20+% revenue growth, when you're at $46 billion, that gets a lot harder to do. That's a lot of shoes. And to top it all off, that's actually minus 10% from the year before. That number's holding over the past month in terms of projections. But next year, which is all but flat, okay, plus 1%, that is ticking down a little bit as of the last 30 days. All right, one more here, and this one kind of surprised me, Mastercard. You've actually had a stock that's performed pretty well. It's got sucked into the pullback of the market, but EPS forward of almost $16, $15.88, and a forward PE of 33. Eyeballing that, I would say that's probably fair. For Mastercard, I would expect that they would be growing more than Visa just because they're smaller. And this is really surprising, at least to me. You have 0 revisions upwards over the last 3 months. You have 31 down, revenue 18 up, but you also have 13 who've clawed back some revenue. So shaky ground, to say the least. We'll skip to the table here. And for this fiscal year, that EPS number we talked about, 1588, that would be growth, sub-double-digit growth, which is a key for Mastercard because they've always done top and bottom line plus double digits. So 8.78, I know it's granular, under double digits, but it's under double digits. And this 1 month trend is, nickels and dimes off of this number. And then you pull back and look at the 3-month trend and the 6-month trend. Listen, it's not a huge adjustment, minus, 2.7 and minus 4.2. But this is a company that I guess you sort of would have expected more out of. It's a more predictable business model. It has nothing to do with interest rates. It's all about card swipes, right, and transaction volume. Now, fiscal year 2 projects to sort of resume the original trajectory, plus 17% growth, back to double digits on the bottom line. But this number's on a little shaky ground. If anything else, you're not seeing any upward revisions. You're only getting small downward ticks. All right, let's go down to revenue. And again, the expectation is double digits for a company like Mastercard. And it looks like they're holding on to that. So the past month, a couple ticks down for fiscal year 1 and fiscal year 2, but you're talking 0.03%. And the 3 and 6 month are actually green. And this number, if they were to hit 31.54 billion at the end of the year, it would be about a 12% year-over-year growth. So double digits, all good. And then looking ahead to next year, if they get 35.5, that'll be double digits too. So revenue appears to be more steady than EPS. But the thing to watch out for in Mastercard this year is this bottom line number, this 1588. And like all of the other stocks that I featured here today, there's a number within a number. And that was sort of the point of going through these stocks, is you have a forward projection today. You have a forward EPS projection today that has not happened yet. As little bits and pieces of news come out, as well as every quarterly earnings report, the corporation will usually come in and say, we expect to hit this number, we expect to miss this number. So that's why the things that you see in January sometimes are dramatically different than what you see in October, even from a projection side, even from a company that's making multiple billions of dollars. There are little cracks, and sometimes there are little slivers of gold, good news that comes out. But when you're tracking a stock that you're super interested in, I certainly recommend just keeping a stranglehold on which way EPS projections are going. You're looking for certain benchmarks, okay? And those can change in a moment's notice depending on stock market news, which is where it's helpful, whether you like Seeking Alpha or something else. You need to be tracking your stocks to keep track of the headlines, because headlines ultimately drive projections. All right, let me know what you think about these 5 companies, their EPS projections not looking so hot. Which way do you think it goes for the rest of the year? Even though I sort of highlighted 5 losers, technically, just like I was talking about on the headlines in the news, it doesn't take, but let's just say a huge client or an invention from AMD to get those EPS projections going back into the green instead of the red. Before you go, don't forget to check out that special offer for Seeking Alpha Premium down below. Hope everybody's doing well. We'll see you on the next video.